Malaysia's robust economic growth and strong market performance sets a positive outlook for fourth quarter of 2024. Tune in to learn more. Hello everyone, I'm Elsie Tham, Head of Fixed Income for Manulife Investment Management Malaysia, and this is your Malaysia market outlook for the fourth quarter of 2024. Most of third quarter of 2024 was spent in anticipation of faster and larger Fed rate cuts as a result of soft inflation prints and weak labour market data. This sparked a wave of optimism across financial markets, which then led to better performance in both equity and bond markets globally. There was indeed a massive global sell-off in risk assets at the beginning of August, which was triggered by the unwinding of Japanese yen carry trade following a surprise Bank of Japan rate hike and dovish Fed signals. Fortunately, the impact was short-lived and risk assets rebounded shortly thereafter. Meanwhile, rally in bond markets started as early as July 2024 and culminated in a higher than expected 50 basis point cut in the Fed funds rate middle of September 2024. Now, after the cut, bond yields began to climb. Elsewhere, political events added layers of uncertainty and volatility to the market. This included the withdrawal of President Biden from the 2024 presidential race in the US and Labour Party's win in the UK election. We move over to China. The second quarter GDP growth slowed to 4.7%, missing expectations and raising concerns about China's ability to hit its 5% growth target for 2024. The PBOC responded with announcements of rate cuts, RRR reductions, and other structural changes in monetary policies. Now, shifting our focus to Malaysia, Malaysia's economic growth remained strong with a 5.9% year-on-year growth in second quarter of this year. Growth was supported by robust domestic demand, continued expansion in exports, and higher household spending. Concurrently, headline inflation remained at 2% for the months of July and August, before easing to 1.9% in September, thus indicating stable and subdued inflation environment in Malaysia. In the recently tabled Budget 2025, the government projected a healthy GDP growth rate of between 4.5% and 5.5% for next year. Fiscal deficit is expected to decrease from 4.8% of GDP this year to 3.8% next year. The government also aims to implement the sales and service tax progressively, focusing on top earners by targeting imported goods such as salmon and avocados, while exempting basic food items. Meanwhile, the minimum wage is set to increase from 1,500 ringgit to 1,700 ringgit. RON 95 subsidy cut is also expected to commence middle of 2025. Investor confidence remains strong, evidenced by net foreign fund inflows, which reached nearly 4 billion ringgit year-to-date September 2024. Furthermore, Prime Minister Anwar announced that Malaysia had approved 160 billion ringgit in investment inflows in the first half of 2024, representing an 18% increase from the same period last year. So as we move into the final quarter of 2024, we believe that the local equity market will continue to outperform its regional peers. Ongoing infrastructure and data center investments, coupled with effective domestic policy reforms, are expected to play a significant role. Additionally, the market's performance is likely to be supported by attractive dividend yields, strengthening ringgit, and a rebound in domestic consumption. In all, we do see a robust and dynamic market outlook for the remainder of the year. As for the fixed income market, against a backdrop of steady growth and manageable inflation, we expect Bank Negara to maintain OPR rate at 3% for now. Now, this stable policy rate is likely to anchor local bond yields. However, in the absence of strong local catalysts, the local bond market is expected to be influenced by external factors such as the trajectory and pace of US rate cuts. Additionally, geopolitical tensions and the upcoming US elections are expected to heighten market volatility in the coming months. On balance, we hold a neutral to mildly bullish outlook on the Malaysian bond market. driven by positive sentiment from the commencement of the global rate cut cycle. Thanks for watching Malaysia Market Outlook. Stay informed and stay tuned for more.